Good day. Thank you for joining me. My name is Warren Davison and I'll be taking you through the August 2020 PSG Wealth Offshore Fund performance. Setting the macro scene. Shares were broadly higher in August amid hopes for a COVID-19 vaccine, as well as signs of continued economic recovery and ongoing policy support. To the US, as represented by the S&P 500, it reached a new peak. The Federal Reserve continued its readiness to offer further support while increasing its flexibility to do so by adjusting how it targets inflation. Eurozone shares rose, with top performing sectors being those economically sensitive areas like industrials and consumer discretionary. UK shares also gained, as signs showed there could be a solid recovery in the domestic economy during Q3 2020, helped by UK small and mid-cap equities. Emerging markets recovered and also posted positive returns. These were helped by the Federal Reserve suggesting the US interest rates as well as the policy support. In the fixed income, government bond yields rose, meaning bond prices fell, and the US dollar continued to decline. Corporates and emerging market bonds performed well with risk-on sentiment. Looking at the PSG portfolios, the chart here shows the AUM on a month-by-month basis. August produced more positive flows and market growth, with the current AUM for the offshore solutions sitting at $1.56 billion. Looking at some highlights. Over the volatile times, the PSG selected managers have performed well. Looking at the first half of the year, we can see that with shares selling off and bouncing back, the PSG selected managers maintained a 65% outperformance relative to the peer groups. When extending this out over the longer term, you can see that over a 3-year period, 86% of the underlying managers have outperformed their respective benchmark. Looking at the PSG Wealth Risk Radar, 7 funds appeared on the risk radar, with 5 of the 7 appearing in the Global Preserver and more so in the pound class. Currency again had an impact for the month, with the pound appreciating 2.2% against the dollar. Looking into the individual portfolios and starting with the Preserver, the fund produced 1.22% return in August, outperforming its sector. The fund unfortunately remains behind the sector over the recommended investment horizon of 3 years, however is once again above the sector over since inception. Looking at the 3-year chart, I've highlighted the year-to-date performance, showing how the fund has reacted in the volatile times. I've also included return and risk statistics at the bottom of the page. For the Global Moderate, the fund produced 3.26% return in August. The fund is above the benchmark over its recommended investment horizon of 5 years by 34 basis points and above it since inception with 15 basis points. I've again included the 3-year chart as well as the risk and return metrics. For the Global Flexible, the fund produced a 4.03% return in August, outperforming the sector by 131 basis points. The fund remains above the sector over its recommended investment holding period of 7 years, as well as since inception. The fund has experienced a nice bounce back post the beginning sell-off of the year. As you can see by the risk and return metrics, the fund has managed to gain more upside while still managing its downside. Onto the Global Creator. The fund produced a 5.83% return in August, outperforming the sector by 20 basis points. The fund remains above the recommended sector over a 7-year period, by 3.3% and above since inception by 2.67% respectively. Again, looking at the 3-year chart, you can see that the fund has managed its drawdown without losing too much of the significant upside. The peer group rankings remain strong across the board, with longer-term numbers producing favourable results. 4 of the 6 funds have produced above-average performance over their recommended holding period, with the global preserver encountering headwinds as I discussed earlier. To tie this all together, we can see that the PSG multi-management is achieving their 3-pillar approach. For the global moderate, which has slightly lagged, action has been taken, and we do continue to monitor. For the remaining 3 funds, each has delivered on its 3 pillars of consistent above-average performance at below-average risk and at a competitive price. Thank you.